What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, we welcome you to subscribe. Otherwise, you can support our channel if you like, share, or comment down below. It helps our content get out to a wider audience, and we greatly appreciate the support. As a reminder, don't forget to hit that notification bell so you get the latest alerts and notifications on all the content that we drop here on the Credit Plug channel. So for today's video, we're going to be reviewing a business loan product. Now, this particular business loan product is a collaboration between Lending Club and Opportunity Fund. Now, Lending Club was one of the first online platforms for personal loans. So, they have an infrastructure and a platform already that's existing. So they've partnered with Opportunity Fund in order to provide business loans throughout the country. So Opportunity Fund is a nonprofit organization that's geared towards providing resources in terms of capital, micro loans, and things like that to entrepreneurs in underserved communities to really help accelerate entrepreneurship. So this collaboration with Lending Club will enable more organizations, more businesses to have access to business loans. Now, Opportunity Fund, their core, base of customers and operations is in California. However, through this collaboration with Lending Club, they're able to expand their reach in order to offer business loans in 44 different states. Now, there's a handful of states. So from what I know, it's North Dakota, South Dakota, Vermont, South Carolina, and Washington, D.C., where this particular loan product is not available. In addition, there are different terms, depending on the state that your business is organized in. So I'm gonna post a link in the description so you can see if your state or your business type qualifies. So whether that's so there's different requirements or different guidelines rather depending on the state and the type of business. So I know there are certain states with minimum limits on the loan that they can get. So that can range anywhere from 10,000 up to 50,000 in certain states. And then the business type, so whether that's a LLC, a limited partnership, sole proprietorship, or corporation. So definitely check that out. I'm gonna post a link in the description. Opportunity Fund's website will let you know if what business types are eligible by each state and what the minimum loan amount would be. So in general, this particular product has loans that range from $5,000 all the way up to $50,000. On the Lending Club website where you would actually apply, it says loans up to 500K. However, I did speak with a representative, and due to COVID, they've actually reduced it across every state to just $50,000 as the max and 5K as the minimum. So a couple things in terms of the qualification. So you're going to have been in business for at least 12 months. You're going to have at least 20% ownership in the business that you're applying for the loan with, and then at least $50,000 in annual revenue, and you can't have any bankruptcies or tax liens. So that's the qualification at a very, very basic level. Now, in terms of the process for applying, right? So although, like I mentioned, this is a collaboration with Lending Club and Opportunity Fund. So Lending Club has the platform, so that's where you're going to submit the application. Opportunity Fund is basically they're backing the loans, right? So they're going to be providing the money to fund these loans. So they're just collaborating. So the online process, what you're going to do, and one of the good things is that you can get a quote basically without having to do a hard check. You can get a quote on the loan amount and the interest rate and term based on some preliminary information. And so you could do that without any impact to your credit, which is a good thing. However, if you want to proceed with that particular offer, then they are going to hard pull you and confirm a lot of the documentation. So in terms of the documentation, or actually let's go over the to get the quote, right? So what they're going to do is they're going to soft pull both your personal Experian and your personal Equifax. They're also going to soft pull your Equifax business and your Experian business credit profiles for your business. So, and just a little side note too, right? When it comes to your business credit reports, right? Um, Experian and Equifax are going to be more towards like getting bank issued credit. Although there are some vendors where they are going to pull your Experian business and telescore and things like that. Whereas Dun and Bradstreet, I would say, is going to be mostly for vendor credit, not bank issue credit. Experian can be for vendor credit and bank issued credit, and then I would say Equifax is mostly going to be for like bank issue types of business credit versus vendor credit. I haven't really come across too many vendors that report Equifax as a handful, but anyways, they're going to soft pull your credit to basically give you an offer. Then if you want to proceed, you're going to have to submit some additional information. So the additional information includes 3 to 6 months of business bank statements, as well as 1 year of your most recent personal tax returns and your most recent business tax returns. So if you have an extension for 2019, then you could submit your 2018 personal and business tax returns. However, if you filed in 2019, then you're just going to have to submit 2019. Whichever is your most recent filing is what you'll submit with the application. And then there is I guess one of the downsides is, let's say you do go through the application, you get approved, there is a 5.99% origination fee, which is deducted out of the loan proceeds. So they take that right off the top. So let's say you get approved for $50,000. They're going to take their 5.99%. I don't know why they don't just say 6%, but they're going to take their 6%. So with 50K, that would be like roughly about $3,000. So you would get $47,000 back from a $50,000 approval. And so even though you're getting $47,000 back, you still have to pay back $50,000 plus whatever the interest rate will be. So that's just one thing that you all should be mindful of if you do proceed with this. And then the timeline between submitting your final documentation to actually getting the funds dispersed can take anywhere between 7 to 10 business days, or if you're just looking in timeline in general, that's going to be 2 to 3 weeks. A couple, I guess, notes about this particular business loan that you definitely should keep in mind. One of the things that I see a lot is kind of this reluctance to provide additional documentation. When it comes to business loans, right, you're usually not going to be able to get a business loan just only based on credit. Business credit cards, yeah, you can PG for those all day long, but business loans, business lines of credit, they're usually going to want some tax returns, business bank statements. Some might even do a 4506T tax transcript request. But I would say, comparing this versus some other commercial types of loans, usually commercial loans from like a bank or even a credit union, they're usually going to require 2 years of business tax returns, 2 years of personal tax returns. And sometimes even a personal financial disclosure where you would have to list all of your personal assets as well. So when comparing them, it seems like this particular loan product with Opportunity Fund and Lending Club is going to be much easier than you face if you were to go to apply for go to Bank of America or any type of commercial bank and try to get a business loan. And then aside from that, like the collateral requirement, this particular product does not have a collateral requirement. So I would say in terms of business loans, this would be a much easier and I would say lower barrier to entry. However, with that lower barrier of entry comes another trade-off, which is the origination fee and probably likely a higher interest rate than what you would get. But there's different trade-offs, right? Depending on your business. And it seems like this particular product, they're lowering the thresholds in terms of qualifications to allow more access to these types of funds. So definitely, if there's anyone who has any experience with this particular, product, definitely let us know in the comment section right down below. And yeah, last thing too, in terms of the use of funds, you could use it for just general working capital, equipment, debt refinancing, or even to purchase another business. So it's pretty flexible in terms of what you can use it for. And also too, the terms only range between 12 months up to 60 months. So between 1 and 5 years. So that's the length of, the loan term. But I would say, if you're a startup business and you don't really have access to, commercial types of, business loans, then this may be an option. Again, if you do have access to commercial types of, financing and your business is much more established, then this may not be something that you would necessarily have to go through. But I do like the fact that they are kind of lowering the requirements. But anyways, that's all I wanted to share for this video. Until next time, y'all take it easy and we'll talk to you soon. Peace.